Welcome back, Alpha Hunters. Okay, so another week is in the book. We are now closed for August 19th, and we need to ask the important question. Is the bear market rally over, and have we started the rollover into a new bearish move on the market? Something like what we saw in early April down to mid-June, something like that. And we will be taking a look at a few things, a few metrics, a few other asset classes that may be kind of hinting towards that. But if you are wanting to be bullish, I will walk through a scenario for what I am looking for to possibly be bullish. I'm not really leaning bullish really right now, but I am watching for certain scenarios. If the market starts to look bullish, I will let you know what I am looking for. So let's kind of get into what went on this week. And if you have any questions about anything that you hear in the videos, or if you just want to swing by the live stream, it's every day. The market is open at 2 p.m. Eastern. We had some really good activity in there this week, just kind of talking through some things, some scenarios, and just kind of watching a potential peak out here on this bear market rally. So we had some pretty good activity kind of going on in the live stream this week. So if you want to get up in there, 2 p.m. Eastern, come join us. So let's kind of walk through kind of what went on this week. So the way we ended last week was Friday was pretty bullish. And with that being as bullish as it was to close out the week, I kind of mentioned it would spill over, and I would expect the first half of this week to be a little bit bullish, okay, or at least Monday, Tuesday, maybe not the whole half week. And we did see that. Monday, Tuesday came in bullish, and then we saw some pull downs then Wednesday and Friday. So let's go to an intraday time frame, and we'll see really kind of what really went on here. 15-minute intraday action. So Friday last week, strong bullish activity. We gapped down Monday and just kind of traded higher for pretty much the whole day. And then we gapped down again on Tuesday and traded higher Tuesday. And it was kind of interesting. We were on the live stream when this action came in, this bearish action right here, and it was pretty strong. And typically the middle part of the day when I do the live streams, it's usually the quiet part of the day. I don't expect much to be going on, which allows us to kind of get in there and do some analysis and kind of figure out what to expect from the market kind of going forward, game plan out a day or two. But this action that was kind of coming in while we were on the live stream was kind of interesting. It took about 25 minutes really for this to play out, but it was a pretty good hit that we kind of come in. And the thing that's interesting about it is it's really kind of close to this downward trend line that we got here. And even though it's not at it, it's roughly in that zone. It's like within the percent above or below. So the market is kind of respecting that area. It's also within this green box that you also see on the daily that's been out there on, at least on my chartings, for well over several months. So that could have potentially been the top on the market, because Wednesday we just kind of gapped down and it wasn't really any major news. We just kind of sold down all night in the futures very steadily for 7 hours before the market opened Wednesday. And we just kind of hung out for most of the day until we got the FOMC minutes to come out Wednesday midday. We got the pop. I started the stream 10 minutes early that day. This was a scenario I really thought was going to happen if we were down kind of this low, where we would pop and we would roll back over as we kind of went into the end of the day. And that was pretty much a scenario that, wind up happening. And then as we go into Thursday, well, we didn't really do much. We stayed within the highs and lows of Wednesday. So we just had an inside day candle, and we'll look at the Qs here just a little bit later and see like how the Qs look with this, but it wasn't really much going on. It was very choppy. End of the day, a little bit on a stronger move, but it didn't get back above the high of Wednesday, which was kind of the key level. You really wanted to see the market get back above that if you're bullish. And then Friday came out and we just opened down and pretty much ran down to the 10 exponential moving average on a daily time frame. And we'll take a look at that here in just a second. And then we just kind of hung out down in this zone around the 422 to 424 type area, 423 type area. That was the story of the week, was really the Wednesday gap down, kind of set the tone for kind of a reversal action. And then the Friday gap down and trade down. Because really Monday through Thursday, the market closed higher than it opened. So we saw 4 green candles Monday, Wednesday, and Thursday here on the daily action. But Friday was the only one where we actually saw intraday selling activity from open to close. So it was just kind of interesting to see. And if you also notice, we had higher volume on the Friday price action than we did and have over previous trading sessions. So definitely one to just be aware of and respect kind of some of the price action that's going on here. So I mentioned the downward trend line. So that downward trend line is going all the way back to the beginning of the year that we connected into late March. Yeah, just respect it. It seems like the market is kind of respecting it as well, or there was some kind of price level in here the market was respecting. I've had the green box out here for a while. You guys have known this. There was a lot of resistance and support up in this zone, so it just made sense that we got a little choppy in there, and we potentially might have topped out from this past Tuesday. Now, the interesting thing here is with this downward trend line is if we are able to bounce here on the market, potentially off this 10 exponential moving average, and start to make a run back up here, we would probably potentially get to the downward trend line before we could take out this high here that we had on August 16th, which is going to be interesting to see if that downward trend line is respected, and then we potentially put in a lower high on a daily time frame compared to that August 16th date. So just be mindful of that. But as far as what's going on into this next week, what I would expect to see from the stock market is almost the similar pattern that we saw this week, where we got bullish activity that came in on Monday and Tuesday. I would expect that to come in as again this next week. And then that's the big if, okay? What if? Are we going to roll over and break down this low that we probably put in today on Friday at least and make a run down to this 417 level? Or are we going to maybe consolidate here for a day or two and then push higher and maybe make a run to break above the August 16th high and potentially break this downward trending line? So that's kind of what I am going to be looking for. I do expect it to be the former, where we probably bounce over Monday, Tuesday, we get some bullish action to kind of come in, and then we roll over probably the second half of next week. And the one pattern I'm really kind of going to compare this to is the one back in late March, back over here, where we pulled down over the course of, we made a high on one day, and then 1, 2, 3 days back into the 10 exponential moving average. Back over on August 16th, 1, 2, 3 days, pulling into the 10 exponential moving average. So we'll see kind of what happens, but back in early April, we did get a bounce for a day, and it looks like a morning on April 5th, and then we just rolled over and rejected. And that kind of set the tone, let you know that, well, we are definitely changing the trend here for the market. So if we do roll over the second half of this next week, that will definitely be a lower high type of action with also a lower low type of action. And that will be a little bit more of a comforting note for the bears, as it's a lower high, lower low, starting to change the trend, change the channel into the bearish direction. But it will not be fully out of the woods, as the bears really need to see the market get below the 417.50 level, because this is a main support resistance zone right here on this blue line that goes back to the base of the top of June the 2nd. And if we get below that, then the bears will probably be in full control at that point in time. So that's what I'm looking at on the SPY, and I'll bring it up in an Excel sheet here in just a little bit, but I'm going to go ahead and go over to the Qs real quick and just kind of look at the Qs. So the Qs, I put this blue box out here a couple weeks back, said we'll probably top out somewhere in this blue box. Well, it looks like we at least are reversing for now. What's interesting about the Qs is you can see already how far down they are. If you look at where they are on August 4th and 5th and like this cluster of candles, and because that's about where they are. And if you look at the SPY, August 4th and 5th, well, they're way down here. So the Qs have been leading to the bearish side, and they've also been leading to the bullish side for pretty much the whole year. And if they're already trading that far down, because about 2 weeks ago I said look for the Qs to really start slowing down their pace and underperforming the SPY, and then last week and this week that happened both weeks back to back. So that is something to be very cautious of, as the Qs and technology could definitely be leading to the bearish side. Okay, so I'm gonna go to a 15-minute and I'm gonna zoom out here. I'm gonna get rid of some stuff and I'm going to put on the screen here the comparison with the SPY. And what's interesting is from, roughly the 5th day, August 5th, is the orange line, the solid orange line is the SPY performance. And you can see over the past couple weeks, the Qs, which is the bars on and candlestick patterns on the chart, is really starting to underperform, especially here over this week and past few trading sessions, really started to underperform the SPY. And since about the August 5th time frame, the Qs are actually down and negative, while the SPY's still roughly up almost 2% over, those 2.5 weeks. So we are definitely seeing that shift in the market go ahead and start to take place on some prices and price actions. So just be very cautious. And if you're not seeing the things to follow through to the bullish side, or if you're wanting to go bullish, just make sure you get those follow throughs on whatever you're trying to look for. But the biggest weighting, going to be in tech is going to be Apple, right? Apple, AAPL. I'm not going to cover a lot of stocks today, but we'll just take a quick look at Apple here, as there is a lot of value still locked into Apple, where I could definitely see a lot of people closing out of long-term positions, locking up capital, protecting capital, and potentially looking for investments in other areas. There's a lot of stocks that have been beaten up and haven't really responded like Apple has. Apple has made quite a run during this bear market rally on the market, but Apple is up quite substantially. So if we just look through, Microsoft hasn't come back nearly as strong. Amazon, not nearly as strong. Google, also not nearly as strong. Meta, Meta obviously has been hammered for most of the year, and it looks like it could definitely be making a run to its new lows for the year. So there is a lot of things that are beaten up and still beaten up, but Apple's not one of them. So if we do see liquidity being taken out of any kind of asset or investment, especially coming from the stock side, it could really come from Apple, because Apple could really be weighing on the market here going forward. And many of you guys know I'm not exactly the biggest bull on Apple, just because of how large of a rally this has had. I would expect a little bit more of a deeper pullback coming from Apple over the next few months, especially if we do have a strong bearish move on the market to new lows for the year especially. So let's make a run through a few different asset classes to kind of just be watching. We'll look at the DXY. Thursday, not much was going on in the total market. We just had an inside day candle for most of the stocks out there. There wasn't really much going on, but the dollar was the one that was moving. The dollar was breaking higher, which was not bullish for stocks. It was kind of it's definitely bearish for stocks if the dollar is strengthening. And we saw that happen Thursday, and it just kind of continued into Friday's trading day. So if we continue to push higher, definitely look for stocks to be more bearish. But I would expect the DXY, or what I would like to see is the DXY just consolidate here before it breaks higher. That would give me a little bit more confidence that it would sustain a breakout higher. The TNX is also another one that we didn't really see much action on it Wednesday and Thursday, but Friday, there was a lot of things moving Friday, which is why Friday was very important to see. We're definitely seeing the TNX tick back higher. As the TNX and interest rates tick higher, that's also going to be bearish for stocks. So this one ticking higher was not good. If we also look at the US 2-year yield, it's just kind of hanging in there, but it looks like it's kind of more consolidating before maybe it pushes higher and takes out the high that it put in back on June 14th. So that is something to definitely be mindful of also. And these guys inverted, or the inversion yield that's been negative for a good part of the past month or so. And it's starting to look like it's going back to the normal or the zero area. So I would definitely look for it to either continue that way or just consolidate down here. If it just continues that way, the market's really going to have an issue, as typically when this inverts to the negative side and it starts to turn back positive, that's when we get some really steep sell-offs in the stock market. So this will be something to kind of just watch and be mindful of, just to see if it continues to the positive side in an aggressive bullish manner. Another one, gold. Obviously, with dollar rising this week, especially towards the end of the week, we saw gold sell off. So gold dropping isn't really like a big deal for the stock market, but is something to just be mindful of if you are into the commodity area, as commodities are just going to get hit by whatever the dollar does. So this is definitely not looking like it's going to continue bullish. It looks like it's going to at least come back and retest in this 160, 159, 158 type area before maybe it finds some support there and continues back to the bullish side. The HYG, I did have someone comment back to me that this is a pretty good thing to keep track of, the high yield corporate bond ETF. And they are not wrong. I just don't really follow bonds all that much. But what's interesting is Friday, we broke down this very solid level at 77.50 that we were just kind of hanging above over the previous few weeks or for most of the month of August. So yeah, this breakdown does not look good. And the way to read the HYG is it pretty much moves or correlates positively with the stock market. So if this thing moves down, you can expect the stock market to move down. If this thing moves up, you expect the stock market to move up. That kind of a relationship. So this moving in the bearish direction obviously is not the biggest bullish indicator for the stock market either. So if you are leaning a little bit on the bearish side, I will be watching the HYG, especially early this next week, because if we do just get a 1-2 day retest into the 77.50 area, and then we fail, reject, and roll down, that's just going to be a retest of that support line, resistance line. So definitely something to watch there on the HYG for you people going into next week. So let's make our run back to the SPY. I'm going to bring it up in an Excel spreadsheet, just kind of see, if we're done, what kind of metrics this bear market rally kind of got us into and where we can expect to potentially get to on a bearish move on the market, okay? This file I've shown off several times. It's been probably a couple weeks since I've shown it off, but I've gone ahead and updated the last known high that we had on August 16th, and we topped out at 431.73. And so that was a bullish retracement of 69 and roughly 0.5%. So if we look at all these bullish retracements from previous bear markets and really just looking at the financial crash and tech bust, 69% is well within like normal tolerances. So, getting to like 78, 70, 60%. We did have one back in tech bust, like 90%. Definitely way outside the norms, right? That was really extended. So that's definitely within the norm. And yeah, I mean, we could have definitely seen the top on the market. And I did already start positioning for bearish positions going out to June of next year. I did that mostly on Wednesday. I had a buddy of mine in the trading room, Diet Cola. He started buying some puts on the market going out to next June on Tuesday. So good for him. He actually beat me to the punch. So that was great for him. So where can we expect the market to kind of get to? Well, I'm not really expecting a huge breakdown of the lows that we put in back on June the 17th. I'm not really expecting a huge breakdown before the end of the year. If we start to break down before the end of the year, okay, that's fine. I'm not really planning for that. I would expect it to happen more kind of in the early parts of next year, maybe in the first quarter of next year. So I just put a placeholder date out here, February 1st. I really think we'll probably get to 350. We'll probably get even a little bit lower than that. But if we get to 350, I'll definitely be taking trades off the table. And it just kind of gives us an idea to see what metrics, if we got to 350 over that timeline, do the metrics line up with some of the previous bearish moves and bearish breakdowns from previous lows that we had and how those metrics kind of line out. So it seems to be like within tolerance as well. If we got to 350, if we got to 340, it would be a little bit more, I think, more than tolerance. But 350 is definitely what I'll be shooting for here. And, we had a previous breakdown on the financial crash of about 5%. Back in the tech bubble bust, we had one about 3.5%. We had one 2.5%. And then as that bear market went on, we definitely had them a lot larger, over 10%, 3 different times. Yeah, 3%, 4%, because the first breakdown that we had, this one was pretty extended that we got down to in June 17th. This one was really extended. We actually got down almost 12%, which is pretty high for how early that was on a breakdown into a bear market. And so, yeah, you know what? Maybe this next breakdown, we don't break down that hard and we just have a little bit more of a shallow breakdown from the previous low. So, breaking that 362.17 low that we had on June 17th, down to 350. Yeah, makes a little bit of sense to me. Is that going to be the total bottom on the bear market? I don't know. It's going to be hard to see. We'll have to see what it looks like on a bear market rally when we get kind of down in that zone or whenever we kind of stop down there. Because I could see us, also getting down to 330, being down 9% or having a 9% breakdown from the previous low. I can make that case, but I think 350 for me is going to be a little bit more on the conservative side. I'd be locking up profits definitely around that zone. And so let's go back to the charts and just kind of look and see what that looks like. And if we do take a look and see, just where that is, well, the 350 area is going to be right between these red and green line boxes down here. And that is going to be really close to the pre-COVID low. It'll be just above it a little bit. The pre-COVID low is back here at this blue line. And I think that's where we'll eventually find a really solid support. Don't know if that'll be the total bottom. There'll be a very solid support right there. Yeah, I'm not really sure kind of the way this lines out. I just know into this green box definitely makes sense to me just to be dipping in and start buying assets that you definitely like. And I'll be talking through a lot of this as we get out there. If we do get out here, as there's going to be stocks that won't be making new bottoms when we get out here if the market continues to break down. And those are going to be the stocks that you want to start investing in because those are going to be the ones that really lead into the next 10 to 20 year bull market that the market's probably going to go into. So definitely going to want to start looking for those stocks as the market's breaking down. So anywhere between like the 350 to 330 to even down to 320, I can see it getting down to 320, but 350 on a bearish move that goes into early parts of next year, into Q1 of next year, I would definitely be taking it off at that point in time and just kind of waiting. Just start looking and doing your research for how things are looking at that time. If you want to start getting your list together for what stocks you want to be getting into, start getting those lists together because it's never too early to start planning. But yeah, I mean, we just came right up into that green zone and we just kind of had a rejection out of there. So we didn't hold yet. And we're just going to have to wait and see how we kind of interact with some of these support and resistance levels that we now got above, especially some of these weekly moving averages that we are now above. So don't really expect a huge rollover of the market, the stock market here over the next few weeks. It'll probably be pretty slow going at first. And then once we start to break down, let me just kind of diagram out what I'm talking about. So if we just kind of chop around and slowly start breaking down, then you'll start to see it accelerate later on. And this is the kind of thing that you're really going to be cautious about. But, if you don't want to get into bearish positions early on, don't have to. You're not going to miss a majority of the move because that'll happen later. And we very much could still pop bullish, So if we do pop bullish, what I'm going to be looking for is if we kind of continue down early parts of next week, we retest into this 417.50 and we reverse and turn higher towards the second half of next week and we go into the week after that. And if we start to do that and consolidate and then push up out of here, break this downtrend line, that would probably get me a little bit more bullish as we just kind of consolidated. We retested a very strong support and resistance level. And yeah, I mean, that just starts to turn bullish at that point in time. So it's going to be interesting to see which way it kind of plays out, but that would be a bullish scenario that I will be watching for. I'm not really expecting that one. I would expect us to be probably more bullish the early parts of this next week. But if we are bearish early this next week and we just get down to that 417.50 area and bounce, Yeah, it's going to be a little more cautious at that point in time. So that'll be what I'm looking for. But for now, I will definitely be watching for the Monday bullish activity and potential rollover second half of next week. And we don't have to break the low that we put in on Friday by the end of next Friday. But if we break it either by the end of the next week or early the week after, this will just be a lower low, lower high type of trend that is starting. And if we do get that, I would expect us to come down to this 417.50 area, try to bounce, and maybe even make a run to try to break this downward trend line. Probably reject, break it down later on. Very similar to what we did in that early April timeframe, where we just had our initial breakdown, came down to the 10, tried to bounce, rejected, came down a longer one, and then tried to bounce and rejected. So that'll be kind of what I'm looking for, but this time around. So we'll just see how long it takes to play out. I don't think it'll play out this long. That'll be pretty long. That'll be several weeks, kind of just floating right on that line. That's really all I got for this week. It's kind of a crucial time period to see if the market is turning over or if we're just going to retest and kind of try to push higher on the market. But we did come into a very solid zone this week, and we did reject out of it. Not exactly looking bullish, and a lot of the other indicators and metrics don't exactly look bullish either. So unless something changes soon, I'd expect to see the market continue to the bearish side. So you guys have a great weekend. Alrighty, take care, F-Hunters.